All right, so let me introduce Cynthia Brown. Prior to, let's see, where am I? Let me look on my she is Vice President of Government Affairs with the American Medical Association. Thank you very much for coming on the line, and take it away.
Sure thing. I'm not seeing my slides though. There we go. Okay, let's go to the first slide of the presentation. As I look at this, I saw that the previous presentation was supposed to cover the small business loans and the emergency disaster loans. So I'm not going into the detail on those quite as much. I didn't want to repeat myself, but there's still plenty to talk about in terms of financial support for practices. And just as an overview, these are the sorts of things we're looking for right now in terms of our COVID-19 advocacy. And it's very active right now. This is a constant thing, and it's taking up all our time right now in terms of dealing with the pandemic. And it's the only thing Congress or the administration is focusing on right now as well. So I sort of tried to come up with some buckets of where advocacy falls in, because there are many sub-issues under all this. But it's, making sure people have access to the care they need and getting to the tests and all that sort of thing. Making sure that physicians and healthcare workers get personal protective equipment and so forth. Regulatory relief, so you're not spending a lot of time and on those kinds of burdens. Also to try and deal with things like some of the Stark laws and those sorts of things that get in the way of you responding appropriately to the pandemic. And also practice viability or, financial relief. Next slide, please. These are some of the financial assistance programs that are out there right now. Again, as I mentioned, you got the small business loans, emergency disaster loans. There's what they call the Coronavirus Economic Stabilization Act loans. Those are things that all industries can rely on, and it's also works for larger employers. You've got Medicare Accelerated Advance Payments, this Public Health and Social Services Emergency Fund, and then there's some tax provisions. And I'll go into each of those later ones in more detail. Next slide, please. In terms of the CESA loans, these are the ones I mentioned that are broader. And something to keep in mind for much of this is that when these initial things were rolled out by Congress, the goal was to keep people employed. So that is a lot of the criteria you'll see in these. They want you to hold on to your employees. They want you to, they want to help you with payroll, sick leave, and things like that, those sorts of expenses. And these are no different. It will work for the larger practices out there. Oh, good grief. My computer just timed out. I'm going through remote desktop. Let me find them elsewhere. Sorry about that. This working from home thing is not as easy as one might think. I'm going to use different slides.
We can be flexible. Thank you.
I'm sorry. I'm looking at the slides on my iPad instead that you sent back yesterday. So anyway, with these, they will apply for larger employers, and also, for practices that may be composed of a lot of smaller practices, but combined under one umbrella. They are more than 500 employees. One of the criteria is to get one of these loans, like a smaller practice that gets, for example, the small business loans couldn't get one of these. It has to be, just these loans and no others. The advantages are a very good interest rate. They should be no higher than 2%, and you don't have to pay it back for 6 months. And again, the employee retention requirement, you should retain at least 90% of your workforce at their full compensation. We're waiting to find out more about these loans. They weren't advertised very much in the beginning, but we do have a website that I'll show you in the last slide where we're posting all this information. Next slide, please. This is the one that you might have heard a lot about. There's a lot of confusion about it. It's $100 billion that was given to the Secretary of HHS to get out as rapidly as possible to providers, so they can keep the doors open. It's just no strings attached, emergency relief. It does include hospitals as well, and as you read press reports about this program, they typically talk about it as being intended to help hospitals. That's not accurate. It's really everybody, and we've been working to try and get funding in there for physician, or try and come up with a seamless way to get the money to physician practices using existing programs they have. There's been a lot of talk that this money's about to start rolling out. If you've seen the media reports that there's $30 billion supposedly that's supposed to be going out the door very soon, that's what this program is about. We don't have the details on that. We presented to HHS a proposal for doing it that just sends it directly to physicians according to their NPI number. So if you're in a multi-physician practice, each physician would get money. Our proposal would give you an estimated month's worth of revenue, just as a grant with no strings attached. And again, it would be administered by the MAC, so we ought to be able to get it out right away. So more to come on that. We need more details, but there should be relief coming, and everyone should be able to qualify for that. Next slide, please. The Medicare and Accelerated Advance Payments, this is really a species of loan. What they will do, and they've typically done this anyway in emergencies like during wildfire areas or hurricane disasters and this sort of thing, they'll look at your previous experience with Medicare. In this case, they're going to look at the last quarter of 2019 and use that as an estimate of what your Medicare revenue might be coming in the next 3 months, and they will allow you can go in and apply for up to 3 months of Medicare revenue in advance. Couple caveats with this: it has to be repaid. And what they'll do, they will recoup it when you go and submit further claims. They start doing that 120 days after the funds are received. If you pay it back promptly within 210 days because you've got enough patients, it's no interest. The payback period can be extended if you don't have enough patients to pay it back, but the interest rate is extraordinary. It's 10.25%, and this is something we're working on to knock that down. Next page, please. Some of the things we're looking at, again, is to postpone the recoupment process until 365 days after you get your money. Also to cap the amount that they can take back per claim at 25%. No interest, we think, during the extended payment period. And also, since you are allowed to ask for less than the full 3 months, if later, if the pandemic goes on longer than we anticipated and you need another advance, we want to make sure HHS has the authority to do that. So those are things we're asking for from the agency now. Next slide, please. There are some tax provisions. I am not a tax lawyer, I don't know these as well, but again, it's about an employee retention tax rate. Again, if you get other kinds of assistance, other kinds of loans and so forth, you might not be able to do this. So you do need to talk to your tax professional, but it's a refundable tax credit, 50% on wages. You can save up to $10,000 per employee in tax credits, and also defer payment of some payroll taxes through the end of the year. So this is something, again, to look at when you do your taxes. Next slide, please. Other financial assistance that was provided in legislation and regulation so far, we're still living under that 2% Medicare sequester that was enacted ages ago to keep extending it. They're going to suspend it for the rest of the year, starting in May. There are Good Samaritan liability protections for volunteers who serve during the crisis to care for patients. Also for residents, they have no student loan payments and no interest will be accruing from now till September 30th. The telehealth expansions, that's something we spent a lot of time on. You might have seen that easing up the current restrictions under Medicare is something that's been sort of rolled out over time. That's been due to medicine's advocacy on this. Now you have no restrictions in terms of geography or originating site. You don't have to have two-way audio-visual. You can do telephones. You can do FaceTime and things like that. You know, all these things. We're also now working on payment parity between telehealth visits and in-person visits, again, to sort of, you know, help you recoup some revenue. Although that's in the work, but telehealth should help relieve some of the stress for some practices. There are some Stark Law waivers that are coming up. Those were included in the legislation, and these can be, or in regulations, and these are things like, you know, if you're going from site to site to site and you're getting office space from the hospital to take care of patients, you know, right now you have to have a good market value for you know, you have to pay in rent and so forth. They can get waivers for that. They can get waivers for giving you housing, for feeding you, all those kinds of things, for doing laundry. I mean, just practical things like that that would have run afoul of Stark laws. There can be waivers for all that now. Also, if you look at Medicare, the Medicare Incentive Payment System, or MIPS, the reporting deadline on that has been extended till the end of this month. You know, that statutorily, they can't forgive it for the rest of the year. But what they are going to do is, if you can't report your data under MIPS, you're not going to be subject to a penalty next year. You can't fail. You won't get a bonus increase on your Medicare payments. They're going to hold you at the same rates, but you can't be penalized under MIPS if you fail to report all your data. Next slide, please. We're about to send out a letter to all federation groups today for sign-on. Hopefully it'll be going today for the COVID-4, the next phase of COVID relief that Congress is pulling together. These are some of the requests listed here that we plan on including in that letter. More Small Business Administration loan funding. That's something that could happen anyway. The Senate's talking about trying to do it now. Of course, they're not in town right now. House and Senate are both out. But if they can, what they did was hotline a proposal, which means they're looking to see if anybody would object. They could pass by unanimous consent with only a couple members in the chamber. They don't have to all come to town. If they can't do unanimous consent, then they can't get anything done without bringing everybody in town and getting a quorum. So more to come on that, but it's clear that there's bipartisan interest in beefing up that funding. So we should be seeing that one way or another soon. We're looking for more direct financial support for physicians and providers, a dedicated fund that can be used to get money out the door quickly. Again, just to keep the doors open and the lights on. For the Medicare advance payments, again, we're looking for better terms, as I mentioned earlier. We're working with private payers to sort of adopt the same expansion of telehealth services and telehealth payment. One of the things Congress can do is apply it to the ERISA plans, which are the ones that are the employer self-funded plans that escape state regulation. So that's going to be part of our ask. Liability protections of the sort you were talking about earlier for physicians when they're trying to adhere to different protocols, when they are practicing sort of outside their usual area to respond to the local needs, all those kinds of things. If patients get infected in your office. And so those are the things that we're trying to get liability protections for. Student loan forgiveness for residents, maybe $20,000 and just outright forgiveness for those who are, you know, being called in to work outside their regular training programs to deal with the crisis. And also want to clarify that there is waiver authority secretary has authority to waive some entitlement restrictions. And so these are the things we've got there. And then the next slide coming up is just our website. Looks like it has the same URL that Medical Society of Virginia does. But we've got a couple pages on there that have links to all the latest guidance that comes out of CDC or CMS or HHS or FDA or whomever. Those are all up there. There's also sort of an advocacy tab on there that you can click on, where it's got some, hopefully, what we hope are plain English explanations of some of these different programs that are out there, or the various requirements. Those things are updated every single day. So I encourage people to go there if they're looking as sort of an early resource to figure out what's going on. And let me stop there and respond to any questions.
Thank you very much. Let me see if we're getting some questions. Some of those are state specific. A couple people are asking about whether the slides will be emailed. If you want to email governmentaffairs@msv.org, we might be able to do that. I know the slides should be on our website, msv.org/COVID-19, later this afternoon. One question was, so we have two physician owners of our LLC medical practice. Does their employment salary qualify for the PPP?
There's kind of, I think there are some limits on that in terms of the amount of money that that they can do. So I'm not sure. Frankly, I left that one for the other presenter who was going to be talking about the PPP. That's the small business loans. So I can't remember. I'm sorry. It's on our website, I'm sure.
Well, Angela, thank you for coming. Let me see if let's see. Looking for Cynthia Brown. Are you on the call by chance?
I'm right here.
Yeah, you're confusing them, Dr. Joe.
Yeah, I am. Sorry. All right.
Thank you,
so
Cynthia.
Now, yeah, thank you very much. All right. So now we're going to have Angela Navarro, Deputy Secretary of Commerce and Trade for the Commonwealth. All right. Thank you. Sorry about confusing the introductions as we go back and forth.
No problem. Thanks to everybody for being on the call this morning. I apologize for having some technical difficulties this morning. Logging in from home, for some reason I could not download the webinar, but I'm joining from my phone, and hopefully you all can hear me just fine. So I am going to talk about the small business programs that were provided both through the CARES Act and through the previous COVID-19 relief packages that came through Congress. We worked with our congressional delegation on recommendations to help small businesses. My name's Angela Navarro. I serve as Deputy Secretary of Commerce and Trade. Within our Secretariat, we manage a number of economic development priorities for the Commonwealth. One of those is addressing the needs of the small business community through our partner agency, which is the Department of Small Business and Supplier Diversity. So I will start with the first slide on the SBA Paycheck Protection Program. I know there was a question about this, so maybe at the end of the presentation I can answer questions relative to this program and others. So the SBA Paycheck Protection Program was passed in the Phase 3 stimulus in the CARES Act by Congress. It's a $350 billion program. It's really supposed to be their signature program to assist small businesses during this pandemic. It applies to small businesses that have 500 or fewer employees, although there are some eligibility requirements that small businesses with larger than 500 employees may be able to meet if they have multiple locations. So there's a hyperlink on this presentation that would allow you to look at the size standards to determine if even if you have more than 500 employees, you might be eligible for this program. It provides support for 8 weeks of payroll, rent, mortgage, interest, and utility payments. There are other debt obligations that you can use the funding to cover, but at least 75% of the money has to cover payroll obligations for it to be a forgivable loan. Otherwise, you'll have to repay a portion of the loan that does not cover those obligations. And SBA is still working out their guidance to lenders on some of these components. The way that you apply is by going through an existing SBA 7A lender. There's a list on the SBA website of which banks are participating. Most of the large banks at this point do have Paycheck Protection Program applications available. I will tell you that some banks have already stopped taking applications because they've sort of reached their debt obligation limit. But we understand that Congress is working through another bill this week, and part of that might be giving some of the larger banks like Wells Fargo the ability to take on more of these types of loans. A couple of other aspects of the Paycheck Protection Program, I mentioned the size limits, the fact that the loan can be forgiven. If it is not fully forgiven, meaning that you don't spend all of the funds received from the loan on eligible expenses, the loan maturity is 2 years. It has an interest rate of 1%. So obviously this is a really good opportunity for a number of businesses. I mentioned it covers up to 8 weeks of essentially operating capital. So there are certain pieces of information that you will need to provide to your loan servicer relative to payroll and operating expenses over the previous 8 weeks. I'll move on to the economic injury disaster loan. That's the next slide. So economic injury disaster loan. This is a program that SBA has administered for a number of years. Traditionally, this program has applied, for example, to a state that had an economic or a natural disaster such as a hurricane. It has been applied in more narrow and limited contexts, but in the wake of the pandemic, the SBA has sort of altered their requirements and let states submit a statewide disaster declaration for the pandemic. Virginia submitted our statewide disaster declaration on March 18th. We received approval from the SBA. They declared our, they provided us with a statewide disaster declaration the very next day. And this is a low interest loan directly through the Small Business Administration. So there's a link on the PowerPoint slide to go directly to that application. Anyone in the Commonwealth can apply. The small business requirements that I provided around the Paycheck Protection Program apply to the Economic Injury Disaster Loan Program as well. So you have to have 500 or fewer employees, both nonprofit organizations and for-profit small businesses are eligible to apply. Again, there are some size standards, so you should take a look at whether you have 500 employees or more. You may still be eligible for this program as well. This economic injury disaster loan, you can take out loans of up to $2 million. So there is an emergency advance that's provided on the slide of $10,000. You're supposed to, when you submit your application, get that emergency advance. It's proportional to the loan amount that you're requesting, so it's up to $10,000 that will be provided within 3 days. We've heard that SBA is starting to process those emergency advances very expeditiously. The application pool for those emergency advances opened up last Monday. So individuals who submitted their applications after last Monday have started to get those advances direct deposited into their accounts. Again, the emergency or economic injury disaster loan program provides a total of up to $2 million in loans for a small business or nonprofit. The interest rates are quite favorable, 3.75% if you're a small business, a for-profit small business. If you're a nonprofit, it's 2.75%. SBA has done a couple other things, including waiving repayment for the first 6 months for economic hardship. And there are some favorable terms that they're providing over and above what is typically provided with this loan program. Okay, so let's go into the next slide. All right, so the SBA Express Bridge Loan. So this program also was provided as part of the Comprehensive CARES Act that Congress passed a couple of weeks ago. And this is really identifying a bridge resource for individuals who might need financial assistance very quickly. In Virginia, there are a number of businesses that were required to close their doors as a result of the pandemic. Non-essential businesses. And so I'm thinking that this bridge loan would really be helpful for that sort of business that may have gone from normal operating procedures to being fully closed for a period of weeks. Any SBA direct lender, express lender, so that's a 7A lender or an express lender, can make these quick bridge loans. They're really for individuals who have an existing relationship with one of those lenders. You can access up to $25,000. The funds are supposed to be transmitted that day or within a couple of days, and really are intended to get these small businesses over the hump as they're applying for some of the other disaster relief, whether it's the Paycheck Protection Program that I previously mentioned or the Economic Injury Disaster Loan Program. And the idea around this bridge loan is that it would be rolled into an economic injury disaster loan and repaid through those terms. So it's a 30-year term, 3.75% for for-profit small businesses and 2.75% for nonprofits. Okay, let's go into the next slide. All right, so the last slide is an SBA Debt Relief program. And basically what this is if a small business has an SBA loan previously, maybe it's an economic injury disaster loan or some other traditional small business administration loan fund, SBA is providing some debt relief for those programs. They'll automatically pay the principal, interest, and fees for a period of 6 months for current 7A loans. And then for any new 7A loan, which could be the bridge loan that I talked about or the Paycheck Protection Program loan, SBA is going to pay the principal, interest, and fees of that through September of 2020. So there's a little bit more information provided on the SBA website. The link is on the PowerPoint presentation for you. Let's see. So there are a couple, the next slide. So this slide provides a little bit more detail around SBA programs. There are some traditional SBA financing options that are also available. There's local assistance programming. We work with our SBA regional office. They have a couple of staff members in Richmond. We also have the small business development centers. That network is run out of George Mason University with Jody Keenan. She's a wonderful resource, and her staff within the Small Business Development Center network. The CARES Act did apply or did provide some additional funding for small business development centers to hire some additional employees to help with counseling and loan applications. So certainly feel free to reach out to your local small business development center for those resources. And with that, I think I have reached the end of my presentation. I'm happy to take any questions.
Thank you, Deputy Secretary. This is Clifford L. A couple questions are coming over if you don't mind taking a crack at these.
Sure.
A common question is, can you apply for the Paycheck Protection Program and the EDIL?
Yes, you can. There is no limit on applying for both. You do have to show that the funds that you're using from the Paycheck Protection Program are covering a different set of capital than what you're using the EIDL loan for. But the Paycheck Protection Program is really a short-term program. It covers 8 weeks of operating expenses. The EIDL program is obviously a longer-term program where you can take out a larger loan amount. So individuals can certainly apply for both, but you do have to demonstrate that you're not using the capital to cover the same expenses.
Next question is, if the practice doesn't receive a PPP loan disbursement for 7 weeks and has to use its own funds for payroll, how does the practice show that the PPP funds are now being used to reimburse the practice for money they had to lay out prior to receiving the funds?
Yeah, so you would have to work with your individual lender that you're taking out the PPP loan from. Each lender is providing the criteria that they would need to demonstrate that it's going toward payroll in order to get that forgiveness. So I would just say reach out to your lender and they'll be able to counsel you on what information would be applicable.
Thank you. A couple of people have asked, when are we going to get the PPP money?
Yeah, so some banks have processed those applications and dispersed the dollars that very same day. I know that banks that are doing that are recording the debt on their own balance sheets. They're still waiting for the note from Treasury. So it just depends on which lender you're going through, whether you're going to get that the funds transmitted that very same day or not. One thing that I will add about the PPP is most lenders are starting with customers that have an existing relationship with them, whether it's a banking relationship or a lending relationship. So I would advise you, as you're thinking about where you're going to go to seek assistance on the Paycheck Protection Program, start with the lender that you have a relationship with and get in the queue, because we know that these funds are likely going to be expended very soon.
So in reference to that, can you, a number of smaller practices use some of the smaller banks. Are there some on the SBA lending list? I've been anecdotally told that many of the smaller lenders may not have in place some of the requirements, for example, in anti-money laundering, and therefore they will not be a part of the SBA program. Can you speak to the truth or not? Is that a myth or?
So we've been talking to the community banks as well as the large lenders, and we know that a number of community banks are participating. I know that they're working directly with Treasury to ensure that they can meet the requirements that were set forth in the SBA guidelines. But we certainly have heard that community banks are participating. Credit unions, I think, are a different story. I know that they're sort of waiting for Treasury to identify how they're going to be recording these debt obligations by issuing a note. They, by and large, have not wanted to record these loans on their own balance sheets. So if you're going to a credit union, you may run into some difficulty right now. But again, on the website or on the presentation, there is a website link to identify which banks are SBA lenders. So I would take a look at that link.
Thank you. Another question is there any reason a small time we can't have the benefits of both?
I think that would just be an individualized decision for the small business.
Okay. And one question, I think you covered this, was that the EDIL limit per small business was $2 million, but the loan advance maximum was $10,000.
That's right.
What is the time frame for reporting employee numbers and salary? We have one doctor leave at the end of 2019 and concurrent reduced staff.
So I guess I'm trying to understand this question a little bit. So is the question that they want to get a Paycheck Protection Program loan to cover staff that have left and they want to rehire them, or is it staff that have left and they don't want to rehire them?
It sounds like they want to hire some more staff to replace somebody who left.
Yeah, that's eligible if you're hiring new workers to meet payroll, but you do have to provide detail to your lender relative to your payroll over the previous 8 weeks. Your lender, I think, can give you a little bit more guidance on whether payroll for an individual who left prior to that 8-week period would qualify.
Another question is that somebody had heard that the PPP loan amounts may end up being less than 2.5 times the monthly payroll due to too many businesses requesting it. Do you think is that true?
I have not heard that. What I have heard is that Congress may, as early as today, be taking up an emergency bill to expand the PPP by adding another $250 billion to it. I think Treasury and Secretary Mnuchin have provided a number of comments over the last couple of weeks, recognizing that the $350 billion that was previously made available may not be enough to satiate the demands of the small business community. So we'll get more guidance today on whether Congress is able to pass an expanded version of this bill.
All right, one other question about it. Two physician owners of an LLC, does their employment salary qualify for the Paycheck Protection Program?
If they're owners of the LLC, yeah, their salary should qualify. I will say that they, again, should talk to their lender because there are some limits for individuals whose salaries are above $100,000, but the lender can counsel them through that.
Okay, perfect. Let's see, there was another question. Listeners, if you want to go ahead and still use the chat function, we're working through some of the questions. This may be something at the national level. Somebody said a task force yesterday said that there were going to be outright grants to medical practices, and the American Academy of Family Practice has a tool to calculate the amount based on decreased revenues as a result of COVID-19. Do you have any information for a program that might be?
I do not have information on what that program might be, although I do suspect that there will be another stimulus bill. I know that Congress is starting to think about what that would look like, an expanded version of it. So that might be where the rumors are coming from.
Can you, we asked the governor this question about 2 weeks ago, but a number of physicians have asked about would there be a delay in the Virginia tax payment, income tax payment this year?
We have delayed it by 30 days already, and I know that the governor has spoken about this in a number of his press conferences. Obviously, we have to balance our budget, and so that's sort of our constraint. Our year end is June 30th, the end of June. So that's sort of, I think, the rationale behind our extension.
All right, thank you very much. Another question is for the Small Business Administration debt relief. Does this have to be paid back?
The debt relief, no. So the debt relief programs are those are programs that SBA is going to administer on an individual's behalf by automatically paying the principal, interest, and fees for a period of 6 months for current SBA loans. And then for new SBA loans, they'll pay the principal, interest, and fees for a period up to September 27th. My understanding is that they're automatically making those payments, and that's not money that has to be paid back.
Perfect, thank you. Another question is the money from the loans taxed?
I don't know. I actually do not know the answer to that question. That might be something where you would need to get counseling from your lender based on how you're taxed.
Thank you. And then somebody asked, is this the Public Health and Social Emergency Fund that we talked about in the last presentation, which you may or may not have seen?
I'm sorry, I did not see that presentation. But no, it is no. I'm just pulling up the presentation now, and that is a fund that is administered by HHS, which is separate and distinct from the SBA funds.
Cynthia, are you still on? Is that a question I can direct back to you?
Yes, I am still on, and she's correct. That is not the same fund. This is one that they're still trying to roll out, but that is the no strings attached, just get money out the door. And it is run by HHS and it's entirely separate.
All right, perfect. Another question is, can a practice get assistance with maintaining part-time employees?
Part-time employees should be able to count, yes.
Another question was in terms of reporting employee numbers. If you have doctors retire at the end of 2020 or cut back hours, does that have an impact?
Again, your payroll is determined by the previous 8 weeks of payroll. So I think you just need to talk to your lender about what documentation you would need to prove that.
Okay. One question was, can you include the EDL to cover payroll beyond 8 weeks?
Well, your loan is only going to be 2.5 times. So I think, you know, if your payroll has slimmed down, then certainly you might be able to stretch it further. But again, 75% of it has to be spent on payroll in order to get the favorable term that the loan would be forgiven. So I think it's going to be an individualized decision based on the practice. But there are some constraints to how much you can take.
Okay, other questions from our callers? Please use the chat function and we will see if we can get to your questions. Let's see, this is a question for Cynthia. Can businesses with less than 500 employees apply for the CESA product while we're waiting for the PPP loan to process? And then we choose which one we take if both are granted?
I think the small business loans, frankly, are going to be a better deal, and I think they'll probably be available more quickly. And I would go for those first, but yeah, you can get both.
And somebody asked, what is the emergency disaster, the EDIL loan again? That was early in the presentation.
The emergency disaster loans, those are the ones that, again, are patterned after what's been in place after natural disasters, where they've got money out quickly. And you can have those and the small business loans, again, at the same time.
And then somebody asked, what are the specifics for the Paycheck Protection Program that determine that the loan does not need to be paid back?
So 75% of the loan amount has to be spent on payroll costs, and the loan has to be used for eligible expenses. And those eligible expenses include interest on mortgage, rent, utilities, and there are some other debt obligations that could qualify, but you should talk to your lender to make sure that you're spending it on the appropriate types and categories of expenses.
Let me see if there's any other question. Will the CESA, this is an AMA question to Cynthia, will the CESA product cover all specialties?
Yes, in fact, it covers all industries. So yeah, not a problem.
Okay. One question is if there's some accelerated or advanced payments for Medicare, will all specialties participate in those?
Yes, absolutely. And you don't have to, you know, it doesn't have to be to give relief from treating COVID patients. It's for people who are impacted by the pandemic. So, you know, you're not doing as many visits, you're forgoing procedures and all those kinds of things. That all counts. It's just that you're impacted by the pandemic. It's not about providing care to people who are infected.
Well, that is, let's see. What help is available for office operating expenses, specifically for medical equipment lease payments and vendor EHR payments?
There's nothing targeted for those things. I think that's part of what goes on with the grants that HHS is going to be rolling out. But I have nothing that's targeted right now at those things.
And this is this may be well, you guys can just toss this up and see. One of the physicians asked that she was looking for an assistant when the crisis hit, so she's working by herself. In solo practice, is there any non-loan relief for businesses like hers?
Just the HHS funding.
Next question is, will the site waiving for telemedicine be extended after COVID so we can continue to see patients via telemedicine from their home?
Perhaps. There's a lot of concerns about the program integrity, or anti-fraud and abuse people are very concerned about this. That's part of the reason it took so long to roll out all the various flexibilities in telehealth. We will certainly be making the case. But for now, everyone's just dealing with the crisis, and we'll deal with the future when it comes.
Angela, this might be a you question, but I think we're getting lots of questions about particular details of your practice about payroll, but I've heard you say a couple of times that really you have to sort of work that out with your particular lender about the particulars of your practice.
Yeah, I mean, I think that's right. Ultimately, we're getting more guidance from SBA. I won't say every day, but maybe every other day right now. They're providing that guidance directly to the 7A lenders so that the lenders can counsel their small businesses on eligibility. We talked a little bit about compensation. Obviously, there are going to be some limits in terms of how much the individual compensation could be forgiven. The guidance that we have right now is compensation in excess of $100,000 for one particular individual will not qualify. So up to $100,000 of compensation for that individual will qualify for forgiveness. Anything in excess of that will not. So I think that's just something that needs to be considered as part of the payroll discussion.
Let me ask Lauren if there are any other questions that have come in the last couple of days that haven't come across the chat that we want to take advantage of Cynthia and Angela while they're here.
Nope, I think we're all set.
Well, to everybody who joined the call, Cynthia and Angela, thank you very, very much for taking time to speak with us today. I think we've answered a lot of questions. So thank you very much for both. Thank you for all the listeners. We will have another one of these calls probably next week, topic to be determined as generated by the membership and what the needs are at the time. So thank you all very much. Have a great day. Wash your hands and be safe. Thank you all.
Thank you.